Joining us now to discuss some of interesting standouts from the reporting season is Chris Haynes, Head of Equities at Equity Trustees. Good morning, Chris. Thank you so much for joining AuzBiz.
Morning, how are you going?
Yep, going well, thank you very much. Good so far. Now, let's check in with this reporting season. If you had to ascribe, and either, it was okay or it was better than expected or it was a bit of a yawn, how would you describe the season?
It's never, a yawn is definitely not what it was. I mean, there's a lot of volatility, that's for sure, and a little bit of disappointment out there and some positives. I think there's certainly a lot of volatility for us around results, so that was definite. And some of the things we expected, discretionary retail to be, generally worse than what we forecast, but it's actually turned out a little bit better. And things like healthcare that's been quite a difficult area, I think, over the last 6 months, and some interesting results in that area. Some poor numbers coming out of ResMed, and not that bad, but also Ramsay as well. And that are features of the result, I think. But generally, we saw costs up and interest costs up, so that's pretty much a feature around that. So companies exposed to rising wages and interest costs on their debt. So that's the general issue and themes into FY24 as well.
Yes, and possibly caution. Those dividends have been also cut and tailored back. Let's focus in on the healthcare. It's interesting because a lot of talk about ResMed because of these weight loss drugs from Novo Nordisk and also Eli Lilly. UBS have come down and downgraded as the stock. And it's really interesting. I've been speaking with so many guests over the last week about this, and the debate is on about whether or not sleep apnea, the problem will be resolved by losing weight, so obese people. But it seems quite a simplistic narrative, and yet ResMed is continuing to fall. It's down to its May 2020 lows overnight.
Yeah, I think it's pretty interesting. I'm not an expert, but I talk to a lot of experts on ResMed, and I think definitely analysts really revert to the worst case scenario. So I think that's starting to be factored in. I think obviously there's an Eli Lilly trial up in which is due for completion in March. So and that's specifically focused on sleep apnea. So that's going to be very interesting. It's hard to see that being good for ResMed, but in the meantime, the stock seems to be factoring in some quite poor outlook. So I guess the question is, which I don't think anyone knows the answer to, is how much of that weight loss drug is going to impact the sleep apnea market. And talking to quite a few doctors and experts in that area, I think the sleep apnea market will be around, but it may be smaller than it is today in terms of total market size. But I think there's a general feeling that the worst case scenario, which is being factored in, is probably a little bit overdone. But I don't think that stock's going to go, in an upward direction until we see that clinical trial in March.
Yes, interesting. Let's focus on WiseTech, which got dragged along with the AI trade in markets this year for some bizarre reason, even though they will probably, use AI for their coders. A lot of people, a lot of downgrades because the expectations for next year have come down, but they are bedding in 2 new acquisitions. Does this make this stock potentially a good opportunity in this sort of holding pattern we have at the moment?
Look, I think what's really interesting about those good companies, and WiseTech, and I put CSL in there as well, is that the analysts and the market does get a bit carried away. And I think they thought those 2 acquisitions would come in and the margins would expand and everything's okay. And I think just the market got a little bit ahead of itself. So there's a few expenses involved in putting those businesses together. So it looks like an opportunity in that stock. It's a very difficult one to value, but I always sort of think about it as the Office, product that Microsoft have. I mean, I look at it as the Office product for logistics. So they've got a long way to go, and I think just the market ran a little bit ahead of the company, so the company really didn't look to 2024 until the results. So it's just a bit of a reality check, but nothing wrong with the business at all, and great opportunity, I think.
Yeah.
So we can expect. I mean, the outlook's still pretty good. So it's just one of those things where, we push prices up too far sometimes in the short term.
Absolutely, a little bit of exuberance gets the better of everyone. Woolies and Coles, it seems like the Woolies, the quality one, seems to have taken the lead here. Do you have a preference between the two major supermarkets?
I prefer to shop at Woolies, but that shouldn't cloud my view. I mean, they're both pretty good. They're both pretty good businesses. They operate in a pretty good industry, and the surprise at Coles was the gross margin. So that was that came down in the second half, and Woolworths went up, and that is primarily around theft. So that theft number added was most of the delta in that gross margin. So I think you've got to think about it. Is that going to be around for a while? Because I think Woolworths dealt with that theft issue a lot better. They got gates and a bit of AI, and Coles is a little bit behind it. So there's that problem. I think that's solvable. So that's a one-off type of an issue. So I don't think there's anything fundamentally wrong with the business. And the other issue is they're rolling out their DCs and their automated fulfillment with Ocado. So there's a bit of indigestion there in the margin. So I've got that big difference in margins, 6% at Woolworths and 4.8% at Coles. I think it's quite hard for Woolworths to get that margin above where it is now. Great business, but quite expensive. And maybe the Coles around here, after it's been slammed following the result, it's a reasonable opportunity in a quality business.